Alright guys, back from Barcelona. Had a good few days away from the charts. Just a quick review on the trades I took last week, and I want to go through interest rate decisions really, and how they can catch traders out, and what you should really be looking for rather than just a consensus of what the rate decision is going to be. So I'll talk about that a bit more after I've just quickly reviewed last week's trades. So the first one for me was Swiss franc yen, and it was a really quick move. I think it was a matter of seconds. Lucky I was on screen when it happened because it come into the zone and bounced, and I think it was the first initial bit of news on China and Taiwan, so that was a nice reaction from the zone. And then on the same pair, it's quite unfortunate because it was a loss for chart analysis. So it was this level and fib, and it did too much drawdown from the entry price that I gave. So it's about 60, but if you stayed in that, then you'd be rewarded because it's 400 pips now. So those of you who know my style of trading, it's level to level. So although this is becomes less significant because of this price action, if this gets smashed for me, then this becomes more significant, especially with the EMA. So if we carried on, that would have been a second buy for me. So some good results really from that pair. Just a shame it didn't really play out for chart analysis because it's just too much drawdown. What else do we have? Aussie CAD. I chose not to take it. I think I cancelled the zone on the day before when price made a strong pullback. I just didn't think that it'd get back up there, but like I said in the last video, you don't think when you trade, you just let price action do what it does, and then you take your zones. So never mind, played out well, over 100 pips if you took that one. Eurobond had a lovely sell on that from this 159.50 area. We're still running in a sell, and I've got a couple of buy areas of interest that hopefully they'll play out this week. But that was it for me on the trading front. So I wanted to cover interest rate decisions because it was pound interest rate decision last week on the 4th at midday. So there, people would have looked at the consensus and thought, right, pound's going to hike, pound must be getting stronger, and then you'll see that there was a hike and pound dumped 100 pips. So things to consider with an interest rate decision: you've got to look at the people who vote for it. How many votes for hike, how many votes for remain the same, and then if there's any votes for a cut. The more votes you get for a hike, the more bullish pound is going to be. So you could get a hike, even though, but then most of the not most, because a higher number than thought voted for to keep the rates the same, but the minimum amount voted for a hike, which that could then bring weakness to the pound, because possibly next time more people might be swayed to hold interest rates. And you got to remember that the traders and the banks that are looking long term, not short term. Also, you need to look at the rhetoric, the statement that comes out with the rate decision. So they might have previously said that they expect X amount of hikes over the next few months, and then they might have changed their opinion in this decision. They might have stated that there'll be less hikes. So obviously, because the traders and bankers are looking long term, then they'll need to reconsider their long term view of the pound. So they might decide to sell some of their pound because they're not going to get as the returns that they thought they would over the next few months. So that leads to the pound becoming weak. You also need to look at pricing in. So if it says there's a hike, if you go back through every interest, if you're going to trade an interest rate decision, you should have looked at every interest rate decision that you can see on your chart. So find out all the dates, go back and see what happened every time, see what the number of votes were for a hike or a cut, and then see the price action straight after the release. And once you've collated all that data, so you've got to remember that trading, only 90% of people lose money at trading. You have to be in the elite to make money. An elite person doesn't just look at the consensus and go, right, this is what I'm going to do. It's backed up by data. So the charts tell you every single thing that you ever need to know in trading. There's previous patterns, it's repeatable patterns. So what's ever happened in the past will happen in the future. So we just take an average of all the things that have happened in the past, and then that gives the best indication of what's going to happen next time. So instead of asking, what do you think can happen, you can go on the chart and find it yourself. That is an elite mindset. So all the data that you will ever need is on the charts. So go back and collate all the data, and then have the best opinion that you possibly can have. Just asking other people is sort of that's not an elite. You're never going to make money because you're not showing any initiative at all. I'm not saying that's what I did, because I just learned the hard way. Like I traded like what I've just described and learned the hard way. So now the way I would approach an interest rate decision is I take a trade, I secure my profit, I leave a runner. If a week or so before we're coming into a rate decision, and it's looking like it's going to be a hike and things are looking bullish, then maybe I'll look to add a small position and build a position over time. Interest rate decisions aren't to trade there and then on the release, in my opinion, unless we've had a few obvious ones in the past couple of years, and it was both on Canadian dollar when we just knew that there was going to be a rate increase, and we did the best research that we possibly could. The fundamental guys at the FX Cartel, and we decided to take sell positions on pound CAD before the Canadian interest rate decision, and they made the rate hike, and they were even more bullish than the consensus on the websites were, but we felt that we knew that was going to happen, and it paid out well. So we did our research over the time leading up to it, and then another big giveaway was that all the Canadian dollar pairs were at key levels. So, and they'd been weak for a long time. So, and they all settled at key levels. So that it's almost like a self-fulfilling prophecy. It's cheap to buy, so more people were interested, and when they hiked the rates, then there was more people interested in buying, because they were all the technical traders saw the currency at key levels. So there's so much more to consider than just, oh look, this is pound's going to be strong because they're hiking the rate. Unfortunately, that just isn't the way that you trade, and it's a quick way of losing money. So I'm just trying to think what other considerations there are. So you've also got pricing in. So if, like I said again, go on your charts, and then you instead of just waiting for the rate decision, you're probably better off being a couple of weeks ahead. And then if you think that the interest rates are gonna increase in a couple of weeks' time, then look for a buy and see if you could, because as the consensus develops, pound will probably get stronger in the lead up to the rate decision. I'm not saying it happened this time, because pound's been dire for months and months, but this could have been attributed to a rate decision, the hike. So that the move has already played out. So the market before the rate decision will be at the price it feels is right for a rate hike. So any deviation from that, or any numbers in the votes that are different, any changes in rhetoric about future hikes, any sort of changes, that's what moves the market, not the rate decision number, unless it's well against the consensus, and then price has to correct itself quickly by people dumping positions because it's the decision wasn't priced in. So then price will quickly go to what it feels right for that rate decision. So I'm wary that I'm talking a lot, and it's a complicated scenario. So just drop me a message in the group in 50 Carl, if you want to discuss it some more. It is complicated, and it isn't just any. If you look at the economic calendar and its consensus is positive for any currency on any data, it does not mean that that currency is going to get stronger or weaker according to what the economic calendar is saying, ever. That is just where the market will be on the data release. So the pricing in happens before, not when the data is released. So just remember, the elite make money from trading, and you might not start off as elite, but over time you either learn the hard way or you listen to traders who are successful. And I never listened to successful traders. I was too much of a smart ass, thinking, well, I'll try it my way, and then after getting punched in the face several times by the market, you eventually realise that successful traders don't tell you something for fun. They're saying it because it's true. So just try and take on board some of what I said today, and then go look at the charts, and then make your own plan. But hopefully this has helped direct you a little bit. Right, have a good week. Cheers.